This is Matt from InvestiQuant. Today is Thursday, February 24, 2022. The markets gapped down sizably this morning, and we have been all up to the upside this morning and into the afternoon. We are holding up near those highs of the session. So this is the S&P chart at the top left. You can see we opened down here at the lows of the session, well below yesterday's low. And from there, we kind of just took off to the upside, and now we're kind of consolidating near the highs. So we opened near the lows of the session. We are trading near the highs of the session following that gap down this morning, and that's what we'll be looking at heading into the afternoon. We'll see what that pattern has led to in a similar market environment. So we're going to be using a time-based entry that gets long at 3 o'clock. It'll exit at 4:15 p.m. Eastern time. Now we've got a gap direction for down here, gap down. I can add gap below the prior day low, but I'd rather keep as many samples as possible, so I'm not going to use that. But that's something you can look at on your own if you're interested. If we go to post-open filters, I'm going to describe the action where the open of the session is near the lows. So I'm going to hit equals here, open and bottom 25% of the intraday range. And I'm going to assume or do the study based upon trading in the top 25% of the intraday range as of 3 o'clock. So we don't know that that's true yet, but currently that's where we're trading right now. All right, next I'm going to do the indicators library here. I'm going to hit below a 10, below a 200-day simple moving average, so I can put us in a similar market environment. And now I can click view results. All right, here we go. These are the results based upon entering the market long at 3 p.m. Eastern time, exiting at 4:15 p.m. Eastern time, when you gap down and then move directionally to the upside. So the opens near the lows and the 3 o'clock price is near the highs, taking place in a weak bear market environment, which I've defined as below a 10 and 200-day simple moving average. Historically, we've got 29 samples to look at in the S&P, 40 in the NASDAQ, 31 in the Dow, 43 in the Russell. Win rates on these, 3 of the 4 are fairly strong. NASDAQ's the only exception. It's just a tad weak, but you've got S&P coming in 66%, NASDAQ 45%, Dow 74%, Russell 65%. So 3 out of the 4 are favored there. Average moves, average win is larger than the average loss in the S&P. For the NASDAQ, it is also larger, just a little bit though, not quite as skewed there. For the Dow, the average win is larger than the average loss. And then the Russell, the average loss is just a touch bigger than the average win. So it looks like 3 out of the 4, at least slightly bigger on the average win compared to the average loss. And 3 out of the 4 have been more favored to the upside by a win rate metric here as well. So historically speaking, it's been a little bit more favoring the bulls into the close if this pattern was in play. Hopefully you found that helpful. Good luck today.